And so there's like an extreme history of these direct participants literally in this system that were using ETFs and using paper instruments as a way to manipulate the open market price discovery that's innate to a system like gold or like some sort of hard money. And now we're seeing Bitcoin being kind of shoved into that box of something where, Wall Street traders can use these funds, use these inflows, and use price mechanisms that should be free and open, and actually gamifying them to manipulate the price.
Bitcoin exchange-traded funds recently saw a huge surge in trading, marking their busiest session since they were introduced in the US in January. The trading volume almost reached $2 billion, similar to the high levels seen on their first trading day in January. Analysts believe this increase in activity is due to the closure of US markets on President's Day, causing weekend trades to be settled on the first working day of the week. Meanwhile, Bitcoin itself is currently trading at around $51,000 to $52,000. Many experts are maintaining a positive outlook on Bitcoin, expecting continued upward trends, especially leading up to the Bitcoin halving event. But behind these surges in prices could be darker things going on in the markets, pointing to people in power. This is what Mark Goodwin, macroeconomist and editor-in-chief of Bitcoin magazine, is urging everyone to be aware of in his recent discussion with Peter McCormack and Whitney Webb. In his analysis, Mark Goodwin unveils a complex web of connections between Wall Street giants and the cryptocurrency market, shedding light on the controversial launch of Bitcoin exchange-traded funds and its potential ramifications. Goodwin highlights the heavy participation of certain well-known financial giants in these ETFs, along with their tarnished history of financial misconduct like market manipulation and deceptive trading practices. Let us now view clips of Goodwin as he goes into detail about the inner workings of Bitcoin ETFs and why these powerful elites want to use blockchain to store assets. As we share these clips, support us by liking, commenting, and subscribing to our channel. Your engagement allows us to keep bringing you informative updates on crypto finance. We hope you enjoy the video.
Yeah, I think he does. I think there's a lot of reasons for that. For one, they're huge partners. Their authorized participant in the iShares ETF is JP Morgan Chase, as well as Jane Street, who are actually sourcing, the Bitcoin for this ETF. And JP Morgan, had one of the largest fines in U.S. history for, having their two of their lead traders spoofing treasuries markets, which are securities markets, and spoofing precious metal markets. These guys, were doing, these setting up dummy trades and basically manipulating the price of gold and silver, and then U.S. treasuries of bonds. And so there's like an extreme history of these direct participants literally in this system that were using ETFs and using paper instruments as a way to manipulate the open market price discovery that's innate to a system like gold or like some sort of hard money. And now we're seeing Bitcoin being kind of shoved into that box of something where, Wall Street traders can use these funds, use these inflows, and use, price mechanisms that should be free and open, and actually gamifying them to manipulate the price. And we saw, Jane Street Capital being where, kind of the breeding ground of where SBF came out of. Now we kind of know SBF and Alameda was using Tether to withhold the price of Bitcoin and try to keep it down, around $20,000, during that, 2022. We now know a lot about how people were trying to manipulate the price of Bitcoin using Wall Street mechanisms or dollar mechanisms. And so I think there's a reason why Fink is pushing towards Bitcoin being an asset, pushing this, hey, we're going to use the blockchain to quote unquote eliminate corruption, having a tokenized system. These are some of the biggest financial crime. The biggest financial crime in the U.S. history of all time was Bank of America, which is a former, large shareholder of BlackRock. And they got fined almost $17 billion for their participation in '08, where they misled regulators and didn't keep people's money safe. So we have JP Morgan, who got charged for spoofing markets, Bank of America, who got the biggest fine ever, and then we have Jane Street Capital. All of these people are directly connected to this Bitcoin spot ETF. As Fink is telling us, blockchain eliminates corruption. We're going to have a universal ledger. Everything's going to have a unique QSIP. You're going to have a digital ID system where you can use to purchase all of these things. I mean, they're really telling us where we're going. And yes, I do think that they want to use the power of blockchain, if you will, to tokenize these instruments, give them instant settlement, and then back it with an asset, like a USDC, which is directly connected with BlackRock. Once again, they were a huge partner in Circle's seed funding. There was $400 million raised by Circle, and BlackRock was one of the main participants in that. There's a lot of conflicts of interest here directly within BlackRock's S1 filing. They make note that stablecoins really affect the price of Bitcoin, and that Tether and USDCs in particular, their inflows and outflows are directly represented in the Bitcoin price. And here we have a direct conflict of interest with the issuer having a minority stake in one of the largest companies issuing stablecoins. So I think that they are absolutely moving towards tokenization very, very deliberately. So I think they need to use blockchain as a way to basically encourage people to join this universal ledger with this universal ID. They sort of need to take advantage of what up to this point has really been a people's revolution, or at least marketed as such. And now we're really seeing it be, maybe this actually is a Wall Street play. These are the biggest participants in Wall Street creating this web for us. Here we are. So yes, I do think quite literally they want to use blockchain.
As these issues are coming to light, Goodwin warns against the enthusiasm surrounding Bitcoin ETFs. As he said, these financial instruments are being used by powerful entities, like BlackRock, to manipulate markets. While Bitcoin is hailed for its potential to democratize finance, its integration into traditional systems compromises its original purpose of financial sovereignty. Goodwin urges vigilance against blindly supporting the adoption of Bitcoin ETFs and emphasizes the need to preserve its core principles of censorship-resistant transactions and unseizable money. Let's take a look at more clips of Mark Goodwin as he explains this.
People are really cheering this on. People are getting up there and saying, hey, we're looking at the inflows and outflows of these ETFs. Bitcoin is going to $1 million before the halving. I think they're really hoping for basically a number go up induced amnesia, basically of who these people are and how they've used these exact mechanisms just under different names. Tokenization of Bitcoin, or the ETFing of Bitcoin, is basically exactly the same as the paperization of the gold markets, right? And so we're cheering this on as if this is this freedom win, where in reality, there's a great argument to be made that Bitcoin has been co-opted and is being used as just another commodity, on a stock exchange for the likes of a BlackRock to manipulate and take advantage of. There's this big ism in the Bitcoin space that it's this freedom technology and it's for banking the unbanked and all these things, and it's such this unbelievable technology for financial sovereignty, which it is, of course, but also it's just that much so for these large institutions. And as much as it is helpful for you or me or Whitney or our friends or whoever, all of those same properties are still apparent for these large, $1 trillion asset holders and institutions, and they get to take advantage of those same things. Same with government, same with the U.S. regulatory system, the U.S. dollar system, So here we are, basically, at the start of 2024, and all of those same things that we laud and cheer on Bitcoin for are now also empowering, criminal entities and criminal asset manipulators. So we have to just be very careful at basically not allowing ourselves to be useful idiots and basically cheer on the coming of this, as Whitney pointed out earlier. They're literally trying to create a new financial system. They're very out front about that, and here we are cheering it on as it's coming, this tokenized world, and Bitcoiners themselves are cheering it on because they know that it will make them a lot of money. And I think that's a very dangerous thing that we have to be very careful here, that this isn't just about making a bunch of dollars for a lot of us. This is about creating an ability to have censorship-resistant transactions and unseizable money. And the ETF kind of directly plays against that, Bitcoin as a currency, and really leans into it as a commodity. I think we're being used a little bit and cheering on this co-option when maybe we should be a little more careful about that.
These issues persist because Bitcoin brings so much benefit to these elites that some are willing to undergo controversial practices just to stay on top of the thriving market. That said, despite public statements opposing crypto, influential figures and institutions have taken actions that support and integrate cryptocurrencies into the traditional financial system. It seems like the negative opinion government officials have towards Bitcoin may be a facade. Here's an example as to why this may be. Despite initially expressing skepticism towards Bitcoin and cryptocurrencies, Trump's administration took pro-crypto measures, such as appointing Brian Brooks, a former Coinbase executive, to lead the office of the Comptroller of the Currency. This move effectively legalized crypto assets for banks and financial institutions, demonstrating a supportive stance towards the crypto industry. There are also similar contradictions in the actions of other influential figures, such as Jamie Dimon, CEO of JP Morgan Chase. Dimon publicly criticized Bitcoin and cryptocurrencies as being associated with criminal activities, yet JP Morgan Chase was actively involved in blockchain technology and crypto-related ventures. For example, the bank developed its tokenized collateral network and engaged in significant blockchain-based transactions, despite Dimon's negative remarks about cryptocurrencies. From everything that is happening to Bitcoin due to the words and actions of people in power, there is a growing need to be more careful of whom to trust. The discrepancy between what powerful figures say and what they do often boils down to a mix of image management and self-interest. As Bitcoin gets more involved with traditional finance and politics, who knows how things will eventually unfold? Will Bitcoin continue to thrive, or will certain forces become the reason for its downfall? Either way, as we go through current issues, we must stay alert and think critically to discern true intentions amidst conflicting narratives. Do you agree with Mark Goodwin's insights, or do you think otherwise? What are your thoughts on the role of Bitcoin ETFs in today's market? Do you believe they represent progress or pose potential risks? Share your opinions in the comments below. Thank you for watching, and don't forget to like, share, and subscribe to our channel for more insightful content on crypto finance. Together, let's stay informed in this ever-changing world of finance. Until next time, happy investing.